Greetings to everyone. Today, I want us to look at control accounts. And control accounts, they are so-called the control accounts because they do control a section of the ledgers. So by control, we mean that the total on the control account should be same as the totals on the ledger accounts. There are two main control accounts. We have the sales ledger control account, and you have the purchases ledger control account. If you recall, I said the major books of prime entry in any business are sales ledger and the purchases ledger, or what we call the sales day book and the purchases day book. That is where we expect most of the transactions to take place. So the other books will be auxiliary books. For example, the cash book will just be recording the sales or the purchases that were made, either on the receipts or the payment side. So when we talk of the sales ledger control account, this is the ledger that totals all the debtors. So when I'm talking of the debtors, we are talking of the transactions that were held on credit basis. So cash transactions will not appear in the sales ledger control account or the purchases ledger control account. So the other name of sales ledger control account is total debtors. The other name of the purchases ledger control account is total creditors. Should be the opposite. So in the sales ledger control account, the balance on the sales ledger should be the same as the totals in all the sales ledgers. Now we are assuming that the business will have different debtors. So when we open all those personal accounts for the independent debtors, the year summary is supposed to come to the sales ledger control account. And I've given an illustration there. Let me scroll down. For instance, I have a sales ledger that has documented data A. So you can see we have sales of 200. We have a cash of 50 that was received, and then the balance carried downward of 150. I have data B, I have data C, I have data D. So when I total the year summaries, for instance, if we take the sales, our sales will be, we have the first data, 200, plus data B is 400, plus 300, plus 500, right? So if we total that in our sales ledger control account, we are going to have on the debit side, 200 plus 300 plus 400 plus 500. That totals to 1,400. As you can see in our sales ledger control account, I have the 1,400. But out of all these sales, what we received as cash is 700. So our balance carried downward is 700. The same case applies to the purchases ledger control account. You said is a summary of all the creditors or the total creditors. So the balance carried downward on the purchases ledger control account will be the same as the totals of the balances in the different purchases ledger. Again, you are going to have different creditors. I illustrated that. You can see how creditor A, creditor B, creditor C, creditor D. So if I get all the purchases that are credited in the purchases in the creditors account, the total should now go to the purchases ledger control account. And that's why we are calling it total creditors. So it should be 600 plus 700, that is 1,300, plus 500, that is 18, plus 800, that is 2,600. So in the purchases ledger control account, they expect that we are going to have a credit of purchases of 2,600. Again, in that period, we had a cash receipt of 1,900. So our balance carried downward is 700. I think we have understood that. That sales ledger control account is total debtors, or is a summary of debtors. Purchases ledger control account is a summary of all creditors. Now, the reasons why we prepare these two control account is majorly to provide an arithmetic check on the postings made in the individual accounts, either in the sales ledger or in the purchases ledger. And we normally do this to provide a quick total of the balances to be shown on the trial balance as debtors and creditors. Remember, I said a trial balance is just an arithmetic summary of the entries in the different ledgers. So the amount that we are going to take to the trial balance as the total debtors and the total creditors will be both drawn from the sales ledger control account and the purchases ledger control account. The other reason why we prepare the control accounts is to detect and prevent errors and frauds in the customers and suppliers account. So when you are dealing with the customers, you can imagine a situation of, let's say, a BC hardware, where some customers are coming. Let's say you have all channels of payment. So there are those who will pay on credit, there are those who are doing cash on the counter, and there are those who are paying through the M-Pesa pay bill, or even the bank account number. You have a through pass to the bank account. So what will normally happen, some clerks may take advantage of the many customers and do fraud. So to provide or to help detect any fraud or any errors in any of the accounts, then the best thing is to have the control accounts in place. Of course, in the advent of technology, this can be controlled because you expect that at the dispatch, there is no customer who is leaving with the merchandise without a receipt. Whether they bought on credit, or they did a transaction on M-Pesa pay bill, or they did a transaction on cash basis. You should ensure the person who is doing the dispatch is clearing the merchandise to leave the store on a receipt. That way you will have control and try to eliminate the issue of fraud or even some cash going in the pocket of some salesmen instead of the business account. And then the last one is to facilitate delegation of duties among the debtors or the creditors clerk. For example, if someone is proceeding on leave and they need to hand over, what will they hand over? So you should provide a mechanism of, this is the sales I had made by the time I was leaving. In progressive companies or businesses, different customers' accounts will be held by different individuals. So you find clerk A is dealing with companies A, B, C, D. Clerk B is dealing with companies D, E, F. So if they are to proceed on leave and they need to hand over their customer's portfolio to another clerk, then the best mechanism of ensuring that there are no arithmetic errors is to do it through the control account. I want to show you the format, and I'll say this is a summary account. So the format is as indicated. So this is the sales ledger control account or the total debtors. So you could either have the debit balance or credit balance. So the first entry there on the debit side is the balance brought downward of the total debits from the previous period. Then we expect that all the total credit sales for the period will be debited in this book. Remember, for sales, we debit the sales ledger, we credit the trading account or trading profit and loss account. So that's why we have the debit for the total credit sales. Remember, I've said cash sales are not recorded in the sales ledger control account. This is a total debtors account. Then we have the refunds to customers. Of course, we know that they are returned inwards. For instance, if you've sold some items that were perishable, or they had reached expiry dates, or they were fragile and they broke some on the way, you can imagine an egg vendor who is receiving some eggs from the farmer, and the farmer's means of transport is a motorbike. So you'd expect, because of the terrain on the road, some eggs will break. So you don't expect the egg vendor to accept those eggs. So that will be a return inwards. So the customer may either be supplied with other eggs or they be refunded the money. So we are talking of the refunds to customers. I was just giving an example. So you can imagine a big supermarket. You've been given a full crate of milk and the whole of it go bad. So we are going to refund to the customer. And this will be done from the cash book, right? Then we have the dishonored checks from the cash book, and we know what causes the dishonored checks. Either they were stale, there were arithmetic errors, or let's say the amount in words was not tallying with the amount in. We have all those, or they had overstayed for more than 6 months. And then we are going to debit the bad debts recovered from the general ledger. Then on the credit side, we have the total credit balances of the sales ledger brought forward. Then you have the total cash received from the credit customers. So this will be appearing on the cash book. Then you have the total checks received from the credit customers or debtors. Again, this is a cash book transaction. Then you have the total return inwards. So this will affect the return inwards journal. Then we have the total cash discount allowed to customers. So you can see, I have said that cash is not recorded in the sales ledger, but discount allowed and discount received will be recorded in these control books because they tend to either increase or decrease our income. Are we there? Again, provision for bad debts will not be recorded in the control account. But you can see number 6, bad debts written off. The reason why we are recording bad debts written off, we are writing them off against our revenue. And then we have the cash received from the bad debtors. Again, this will be a transaction in the cash book. Then we have the purchases ledger contra. I'll be explaining what is a contra. A contra is that transaction that will be appearing. Contra means opposite, right? So it will be appearing in both the sales ledger and the purchases ledger. That's why we are calling it a contra. And then we have the allowances to customers. Allowances to customers, either due to the discount allowed or otherwise. And then from there, we are going to balance our books. So the refunds to the customer, just to expound, sometimes business can refund some cash on the customer's account. And this will take place when there is a credit balance on the debtor's account and the customer is not a creditor. So what we normally do, our cash will reduce. Cash is a current asset. So we are going to debit the debtor's account and credit the cash book, right? With the refund that we are giving the customer. Now, if the business has not paid this amount owed to the customer and it is carried forward to the next trading period, a credit balance will be appearing on the customer's account, right? Therefore, if a firm has several customers, this information will be appearing as the total balance carried forward. And this is the amount that we expect to be appearing on the debit side of the sales ledger control account. I've talked about the contra. The contra that we are talking about, if you recall in the cash book, our contra entry was the amount that is being drawn from the bank account either for the business expenditure or taken to the cash side of the business. A contra, in the control account, some debtors may also be creditors, isn't it? They are supplying and they are buying. So they are supplying goods to us and they are equally our customers. So if the amount due to them as creditors is less than what they owe us as debtors, then a credit balance can be transferred or is transferred from the creditors account to the debtors account. And this is what is resulting into a contra entry. Are we there? So if debtor A, let's say we had done sales of 2,000 and then they did purchases of 1,000. Our contra for the purchases will be 1,000. We sold 2,000, then out of the 2,000, they have taken goods worth 1,000. We are going to have a contra debtor of 1,000, right? We'll be coming to a better example and we'll see what is affecting now the both books. Now, the format of the purchases ledger control account is as illustrated. So you can see it's like the opposite of the sales ledger control account. So we could have either a debit balance or a credit balance, depending on how we closed the previous period. But more importantly, on the debit side, I have total cash paid to creditors. Again, this will be appearing from the cash book. Then I have total checks paid to creditors, again from the cash book. Then I'll be having the total cash discount that was received. Again, this will be drawn from our cash book. Then any allowance that will be given by suppliers. And then we'll be having the sales ledger contract that I've just explained. If there are any return outwards. Now, remember we are now purchasing. Suppose we buy some items that didn't meet our expectation. Let's say they were of wrong brand, they are expired, they are fragile, or they had oversupply. We are going to return them, isn't it? So our total return outwards will be coming from the return outward channel. Then on the credit side, I'll have the total credit purchases for the period. This will be coming from the purchases day book, and then any refunds from the supplier. And this will be appearing in the cash book. If we didn't have any credit pending, then we expect that you're going to be refunded cash. Then we balance our books, and we have the total credit balance, and then the total debit balance. Of course, we are going to carry this forward, assuming that the business is a going concern. This will be carried forward to the subsequent trading period. Now, I want you to note the following. I've said that cash from cash sales should not be included in the sales ledger control account. Cash discount, whether discount allowed or discount received, is included. Trade discount should not be included. Why should trade discount not be included? Trade discount is given because of cash sales. So anything that relates to cash sales is not appearing in our control accounts. Then I have provision for doubtful debts. It is not included in the sales ledger control account. This is because now we know that provision, the International Accounting Standard 37, gives the accountants that mandate. We know we call it the accountant has been given the mandate to provide for, or rather what we call the probate value of the contingent liabilities. So when we have the provision for doubtful debts, it can either go up or down. If it is an increase, it is an expense. It's supposed to be debited in the profit and loss account. If it is a credit, it is supposed to be, or if it is a decrease shows we had provided more, and therefore it's like we are earning an extra income. That will be added to the gross profit in the trading profit and loss account. Then number 4, cash purchases are not posted on the purchases ledger control account. Well, in some cases, it can be included, especially in incomplete records. We are going to study this in our financial accounting too. So this will be covered later. But for now, our cash purchases are not being posted in the purchases ledger control account. Then we have interest due. Maybe the business is trading in some shares, or they are giving out what we call overdrafts, and they are earning some interest. Shares are giving them dividends, etc. Any interest due that is charged on overdue customers may be shown on the debit side of the sales ledger control account. However, when trying to determine the turnover in incomplete records, and that's why I don't want to open this topic at this level. When trying to determine the turnover or how stock movement is appearing in the business or occurring in the business, this will be omitted. So allow us to again cover this in our financial accounting too. So those are not befores when we are preparing the control accounts. There are 2 examples there that are worked out. I don't have, in the interest of time, I'll share these notes in the portal. You can go through them. I want to give you an example type of a question. And this is how the questions will appear in your examination. You've been given a question there, and you've been told to explain the purposes for which the control accounts are prepared. You've given the purposes. You say the first one is to provide the arithmetic check, then provide a quick total of the balances that will be shown in the trial balance. Again, it helps to detect or prevent errors, and then to facilitate delegation among the clerks, either the debtors clerk or the creditors clerk. They have that question. The balances and transaction of Kopesha Limited for the month of November are listed as below. You'll be given those balances. What you need to do at the onset, you can use your pen to go highlighting what will affect what. You've been given the balances. I've shared this question in the portal. What I can do, let me see whether I'll be able to carry it to the Excel. We work from the same page. I have now the question on the portal. Let me share my screen. Now this is a question. So what we'll do, we are going to have the 2 books here, and we'll be populating them simultaneously. So as the transaction occurs, we'll be documenting them. So the first one is our sales ledger control account. Sales ledger. And you say this will be documenting all the data. And then on this other end, I have the purchases ledger, which will be documenting all the creditors. Well, there we are. So we can start. We've been told the balances on 1st November. We start with the sales ledger. We have a debit of 9,123,000. So I'll be giving my amounts in 3 notes in the interest of time. So I have the balance downward. The amount is let me have a column for amount. So that is 9,123,000. Then we have a credit balance. So balance brought downward. A credit balance of 211,000. So I'll put my amount in 3 notes. Then on the purchases ledger, I have a debit balance of 4,490,000. Again, I record that. 4,490,000. And I got a credit balance of 88. No, this is a credit balance. So this is a debit balance. 88,000. Then a credit balance of 4,490,000. There we are. Now we go to the transactions that were held during that year. So we've been told purchases on credit of 18,135. Purchases on credit. So purchases are supposed to be credited in the purchases ledger control account. So purchases, and they are amounting to 18,135,000. Then next, allowances from suppliers of 629. Allowances from suppliers. In our format, we said allowances from suppliers are supposed to be debited in the purchases ledger control account. So I have allowances from the suppliers. Allow me to copy paste. And they are amounting to 629,000. We go on. We are populating as these transactions come by. Then the third one is receipts from customers by checks. Receipts from customers by checks. Receipts from customers by checks. Receipts from customers by check. So we are receiving because we've sold, isn't it? So it's by check. So I have bank. So in our sales ledger control account, I'm going to credit 27,370,000. These are receipts. Remember, we are getting this from the cash book. So we debit the cash book, our cash is increasing, we credit the sales ledger, right? We go on, then sales on credit. Sales on credit of 36,755,000. Sales are supposed to be debited in the sales ledger control account. So the amount is 36,755,000. The next transaction is discount received. We have a discount received of 1,105,000. Discount received. Discount received are supposed to be debited in the purchases ledger control account. And just copy paste that. So we are debiting the purchases ledger control account. The amount is 1,105,000. The next transaction is payment to creditors by checks. Payment to creditors by check. We are paying creditors, so we are the ones who are paying. So we are going to debit the purchases ledger control account. We are paying by check, so that is bank, and the amount is 15,413,000. 15,413,000. The next transaction, now we have a contra settlement. Contra settlement. Remember, we said contra are those settlements that will be appearing on the both control accounts. So you'll be debiting the purchases ledger and credit the sales ledger with the same amount because it's a contra settlement. In other words, we are purchasing and at the same time we are selling. So the supplier supplies to us, so we are purchasing from the supplier, then they take away merchandise equivalent to what they have supplied. So we are going to have a contra. So I have a contra settlement. So I'm going to debit the purchases ledger with 3 million. The merchandise is worth 3,046,000. And I'm going to have a contra settlement on the, I'm going to credit the sales ledger control account to complete the contra. So it's 3,046,000. So you can see how we've recorded. They have supplied to us, the creditors. They have supplied to us, so they are our debtors. And again, they have taken merchandise equivalent to that supply. So we have settled. We are at par. They supplied or we purchased from them, then we sold from them. We are the business. Then we have the bills of exchange receivable, 6,506,000. Bills of exchange receivable. We are receiving is a receipt, isn't it? Debit cash book, credit the sales ledger control account. So I'm going to take this amount. We've debited our cash book. We are crediting our sales ledger control account. So the amount is 6,506,000. Next transaction, allowances to customers. 1,720,000 allowances to customers. We are now allowing to the customers. Allowances to customers. Allowances to customers. These allowances are supposed to be 720,000. Allowances to customers. Allowances to customers. We are the ones who are allowing, isn't it? You can see allowances from suppliers were debited in the purchases ledger control account. So allowances to customers will be the opposite. We are going to credit the sales ledger control account. So the amount is 720,000, 720. The next transaction, customers checks dishonored. Customers checks dishonored, 489. We say dishonored checks are supposed to be debited in the sales ledger. So dishonored checks. And we know the reasons why they are dishonored. Either the account had inadequate money, or the checks were stale, or the amount appearing on the check in words and in figures were not tallying. So I have the amount of checks dishonored is 489,000. Then cash received from credit customers. Cash received from credit customers. Cash received from credit customers, 4,201,000. This one will be credited in the sales ledger control account. We are receiving is a receipt. Our cash is increasing. We debit the cash book. We credit the sales ledger control account. The amount is 4,201,000. We go on. Then refunds to customers for overpayment. Refunds to customers for overpayment. We are refunding the customers for overpayment. Refunds to customers for overpayments will be debited in the sales ledger control account. So I'm going to debit the sales ledger control account. The amount is 53,000. They had overpaid by 53,000. Then discount allowed of 732,000. Discount allowed will be appearing on the credit side of the sales ledger control account. We are the ones who are allowing, right? The amount is 732,000. There we are. I think all the transactions are, those are the transactions that were held in November. Then we've been told further that the balances on 30th November, we had a credit balance of 136,000 on the sales ledger, and we had a debit balance of 67 on the purchases ledger. So in other words, we are talking of the balance that will be carried downward. So a credit balance on the sales ledger will be appearing on the opposite side of the sales ledger control account. So I'm going to have a balance carried downward. Is a credit. So you can see how I'm carrying it down. It was a credit balance. So I'm going to debit. So this is 136. So that when I carry it, when I bring it downward, it will be appearing on the credit side. You get. And then the purchases ledger had a debit of 67. So a debit of 67 should be appearing on the other side. So balance carried downward of 67. And there we are. I have all the transaction held. So what is left is for me to balance this account. Balance of the account. The screen is appearing at the margin. So I want to balance all these accounts. I've held all the transactions. My screen keeps on shifting because it's appearing on the next to the merging window. So there we are. So I have a total of 46,556. 46,556. So that is my balancing figure, 46,556. So this one should be equal to this minus the total which is all this, that point. So my formula is not working. So the total here is 42. I'm getting 42,786 minus 46,556. So the balance is 2,770,000. Can confirm that. So my book is balancing at that. You go to the purchases ledger and balance it. So this seems to be the larger size. On this end, I think this is up. So I have 22,692,000. So my books are balancing at 22,692,000. So 22,692,000 minus 20,281. Minus 20,281. That will give me 2,411,000. So this is my balance carry down one. So balance carry down one. On 30th November, this is how my books will be appearing. Carry down one. So that's how my purchases ledger control account will look like. And this is how my sales ledger control account will look like. Any question can be posted or directed to me in the portal. I will share this working in the portal for your perusal or for your can check. We have different levels of understanding. So there are those people who will grasp. There are those people who will need some more time to try and understand. So there we are. So that is how the questions will appear like in the exam. The next item that I needed to touch on are the errors on accounts. And if you recall, I said we have two types of errors. We have those errors that will affect the trial balance or that will make the trial balance fail to balance. And we have those errors that will not affect the trial balance. At this level, I want us to look at the errors that don't affect the trial balance. And trial balance, if you recall, I said it's the summary book of all the ledgers. So after you've done the journal entries, you expect that you are going to post your balances in the trial balance. However, on taking a close check on the balances, the transactions that were held may have had errors. And therefore, the balances that you'll be posting in the trial balance may be incorrect. They will either be over or understated, but the trial balance will still balance. Now we have these errors that will make the trial balance still balance. The first one is the error of omission. An error of omission is when the transaction is completely omitted. In other words, you don't record any double entry. For instance, let's say there was a sales invoice of 400, which is not posted in any of the journal, either the debtors account or the creditor's account. So what will normally happen is that error is understating both the debtors and the sales. And therefore, it will not be detected in the trial balance. It is an error of commission. You have omission, sorry, you have omitted it. But to correct it, we normally debit the debtors and credit the sales. Of course, we are doing what we ought to have done. The second one is the error of commission. And this error occurs when a transaction is posted to a wrong account, but the account is of the same class. For instance, you can see we have two debtors here, T. Thompson and we have L. Thompson. So if we affect T. Thompson with the L. Thompson's account, our trial balance will still balance, although the debit was made in the wrong account. So to correct it, we are going to reverse the entry. We are going to debit the T. Thompson and credit the L. Thompson. Maybe the challenge was the names. The names are same, and could be that's what caused or brought the confusion. Then we have error of principle. And in this type of error, a transaction is posted not only to the wrong account, but also of different class. Look at the example there. Motor vehicle purchase for 400 is posted to the motor vehicle expenses account. So instead of now posting the motor vehicle in the motor vehicle account, we've taken it to an expense account. Now the transaction is appearing on the debit side, and therefore it will not affect the balancing of the trial balance. But to correct the error, you are supposed to reverse the entry by debiting the motor vehicle account now to reflect the asset that we purchased, and credit the motor expenses to cancel out what we had earlier debited. Then the fourth one is complete reversal of entries. A transaction is posted to the correct account, but to the wrong side of the account. So it will still balance, only that we posted in the wrong side. For example, cash drawn from the bank of 150 for business use is posted on the debit side in the bank account. You know, when cash is withdrawn from the account, we are supposed to credit the cash book, isn't it? So to correct the error, I'm going to debit the cash in hand by 150 and credit the bank account. And then I have an error of original entry. And as the error appears, is of original entry. So when you are doing the entry, this is when you do the error. For example, cash received from a debtor was 980. The cashier, when they were doing the entry in the computer, instead of hitting 9 first, they hit 8 first. You can see 980, 890. Now, this has made the account to be, one account to be understated and the other account to be overstated. Right? In this case, our account is being understated by 90 shillings. So you're going to debit the cash book to reflect the 90, and you're going to credit the debtors. Are we there? And then the last one is the compensating errors. And these are errors that tend to cancel each other. It's miraculous, but it can happen. For instance, if the effect of one error was understating an account by some amount, and another one is overstating an account by the same amount, then we do expect that these errors will be canceling each other out. That's why we are calling them compensating. So one account is overstated, the other account is understated. For instance, purchases, you can see we have, if the balance carried forward from the purchases account is 3980, but shown in the trial balance as 3890. And we have another account where fixture amounting to 4540 is appearing instead of 4450. So the difference is 90. So what we are tending to do is to cancel out this amount. You can see 3980 minus 3890 is 90. 4450 minus 4550 is again 90. So this type of an error is corrected by use of a suspense account. And suspense account will be carried again in our financial accounting tool. So that is the end of our financial accounting 1. I'll post these notes in the portal for your perusal. I also realize people have a problem with the statement of comprehensive income. And we said statement of comprehensive income is the old school, is the book that we used to call the profit and loss account. And then we have the statement of financial position, which is the balance sheet. So what I can equally do, I'll share the format of the two accounts, the statement of comprehensive income or the profit and loss account, and the statement of financial position, which is called the balance sheet. I will also post the format in the portal for your perusal. Thank you. If there are any concerns, I can be reached on my line, or you can just drop a query in the portal. I'll be responding to them.